Hello there and good evening. Welcome to the Jim Bohannon Show from Westwood One Radio. We're at 1-866-50-JIMBO, 1-866-505-4626. Online, you'll find us at jimbotalk.net. You can follow me on Twitter at Jimbo Talks. Whoa! What was the license number of that bear running loose out there? Enough to make Wall Street hunker in the bunker again. And for the record, the Dow Jones Industrial Average plummeted more than 1,000 points at the opening bell this morning. That's unbelievable. Wouldn't even have been possible, I suppose, a few years ago until they got in the automated trading. Biggest market daily drop since 08. Well, they recovered a bit at the opening. Then they stumbled again and wound up down 588 points on the day. Another down day, as Andy Rose reports on just what seems to be going on.
That ring signaled the beginning of a wild day at the New York Stock Exchange. The Dow dropped more than 1,000 points in the first 4 minutes of trading. What followed was a day of slow recovery and then more drops. Today's dramatic shifts were not completely unexpected.
Clearly, people have been talking about a potential correction for weeks, actually months, maybe most of the year. And now we've got something just happening much faster with a lot more velocity than anyone would have anticipated.
So what prompted this roller coaster ride? In short, fear over China's economy. China is the world's second biggest economy, and its explosive growth in the last 2 decades has been the engine for the global economy. But now that growth has been slowing in recent months. Chinese stocks dropped 8.5% today, and all Asian markets suffered major losses.
This is a moment, really, that's been coming for 15 years, the big China slowdown. And if it comes, it's going to be really dramatic. I think if it happens, a hard landing in China, we haven't nearly seen the worst of it.
As for the average investor intensely watching their 401ks right now, financial experts have one piece of advice. Don't panic.
If you're just now trying to find out what your 401k login is, it's too late. The market has already moved, you know. I mean, you shouldn't be making personal finance decisions based on a few bad days in the market.
I'm Andy Rose reporting.
All right, let's talk about just what is happening and maybe even more importantly, what is not happening with Clark Hodges, Vice President with the investment firm Hodges Capital Management, online at hodgescapital.com. Good to have you with us tonight.
Thanks for having me. It's good to be on.
Yeah, first of all, I don't know where we got the idea that China had a magic wand, having newly acquired or reacquired capitalism, that they were going to keep growing and growing and growing. I mean, this is the kind of correction that was long overdue, wasn't it?
Well, it's hard to say that it was overdue. My take on things is we're not in a euphoric type of market. I should say we weren't before this last 3 or 4 days in the market. We're not at real high multiples on a lot of our companies that are making up the indexes. You don't see 30 and 40 price earnings multiples on growth stocks. You see 18, 19, 20. So historically, that's not overpriced. And so I don't know that I would say that it's overdue by any stretch of the imagination. I look at it as a reaction to China. But guess what? There's a lot of companies that don't really have anything to do with China. And if those companies' stock prices came down just as much today as anyone else's. So there's probably a lot of good opportunity. A lot of good quality names are on sale now.
Well, that's another thing I certainly wanted to cover before we're done tonight, and that is that for bargain hunters, come on in. Let us not forget, a lot of people took a bath in 1929, but a lot of fortunes were made in 1930 from people who were buying up stuff dirt cheap back in the very depths of the Depression. And then, of course, ultimately the market did rebound, and those people had their net worths multiplied 5, 10, 20 times.
Right, and that's what you need to do is have an outlook where I'm buying when everyone is selling. There's panic in the street. That's a good, sound strategy right there. Ask John Templeton. He made a career on that. And then have a long-term perspective. You're not going to turn around next week and take your money and run. This isn't Las Vegas. You're going to buy quality and own that quality and hopefully buy more of that quality down the road and something you want to grow with over time, 2 and 3 and 4 and 5 years. And if you have that attitude and you have that mentality, then things like today don't scare you as much. They're hard to deal with, for sure, but they don't scare you as much. And you understand that hey, I'm picking up Facebook, or I'm picking up Home Depot, or I'm picking up American Airlines 15 points cheaper today than last Thursday. And that's got to be a pretty good entry level in some cases.
Now, I would have thought that we would have entered this past day with enough bargains out there that would have taken hold, and obviously the sentiment was entirely the opposite. Now, I grant you we will reach a point, I hope it's somewhere before the 10,000 Dow, but at some point we'll reach a point where people will say, oh, those are just too good to pass up. I'm buying. But I confess I'm among those. I sort of thought there might be a recovery today. I really did.
Well, you did see quite an active market. I don't think I've seen a pullback this dramatic and have the swings. Look at the point swings we had today from at 8:34, so 4 minutes after the market opened, we were down over 1,000 points. And then at lunchtime, I saw the Dow down 140 some odd points. And then by the end of the day, here we are back down 580 points. So what a swing, what an emotional swing. So it obviously somebody stepped in and bought. And on the market open today, my contention is that's a lot of computer trading, a lot of algorithms that are put into place to capture these moments. And based on last week's trading, you had all these computers ready to go right in the open. And there was a ton of computer trading right in the opening. And then a few minutes later, you saw some actual real buying from real people because you started seeing some of these stocks drastically go back up from where they traded their low that day.
Yeah. I
know Netflix, I saw Netflix print at around 85.5. At lunchtime, I saw Netflix print at $107. So think about that. Somebody could have bought that and sold it. I don't know if they did or not, but there were some tremendous swings today, and that's really probably the one thing that worries people the most is will that volatility be something that's here in this market for a while? I don't know. You do go through margin situations with people who have margin, and all of a sudden they're forced to sell to cover some margin, and we could have some of that, but I think having a nice bounce back somewhat today is a good sign.
1-866-50-JIMBO, 1-866-505-4626 is our number. And again, I think it is important to emphasize here, there's no need to panic. The only people who have a problem today were people who were selling and had to sell. If you had to sell, well, this was kind of a bummer. But if you're like most of us, we're still buying. I'm not cashing in anything. Then hey, scarf it up and enjoy all those additional shares that you can get for the same buck. Again, I've never bought into this notion of the sky is falling, the sky is falling.
Right. It's really the opposite. I mean, if you and I were to walk down the street and the grocery store had a sign in the window that said, filet mignon on sale from $6 a pound to $2 a pound, you probably walk in there and get you some of that. But when stocks go down, everyone runs for the hills. And so it's really an odd scenario where you see things cheaper and you want to sell them. And I don't understand that mentality because if you know the investment, if you understand what you're investing in, you should have confidence to know that, hey, XYZ company, 15 points cheaper after 3 trading days, and they don't have any business revenue creating in China. That's an opportunity. That's 9 times out of 10, that's a good purchase price. It doesn't mean tomorrow may not go back down, but it certainly means that given some time to get back to normal market conditions where companies' stocks are traded on their earnings, it's probably a pretty good buy.
I'm assuming that most investors know what they're doing, although, again, of course, we've seen a broad increase in the number of people who invest, even though it may well not be in terms of playing the market on an individual basis. I mean, a lot of us have 401ks and this sort of thing, brokers that handle that stuff for us. But in general, Americans, not this audience, but in general, Americans, I think, are pretty economically illiterate. Clark?
I agree.
Yeah. And so it's easy, I guess, to get spooked into something like this. And I think the saving grace is that most of those people who are perhaps the most spooked by the headlines are probably not directly engaged in the market, although they may well be in ways they don't even realize with pension plans and what have you.
Right.
Yeah.
I think people are uneducated on how easy it is to invest in the stock market. I think the perception is you have to have a lot of money, and you have to, be able to move the markets with your own account, and that's simply not the case. One of the greatest things I see in my career is people who take small amounts of money and invest it monthly in a mutual fund, and they just dollar cost average $50, $100, $200 a month, whatever they can afford, and they are consistent with that. And what that turns into after 5, 6, 7, 10 years of doing that, and all you've done in the meantime is breathe, that's a really good thing. And a lot of people wake up one day and go, oh, my gosh, that's what my mutual fund portfolio is worth? I've only been sending them $100 a month, but my goodness, that compounding interest sure did help out. And it really is a nice thing, and it doesn't take a lot of money. So it's sad that a lot of people don't understand that, because we are the ultimate consumer nation. People get money in their hand and they spend it. Mm-hmm. And if they understood by having a little foresight to look forward for a few years with Starbucks money, basically, you could really have a nice nest egg going for you and be a capitalist and be on that side of the table instead of working for somebody.
Yeah, in this day and age, if you put aside a reasonable amount of saving every week, even when you're starting out and you're scrimping, and so another meal on ramen noodles, but if you put aside minimal amounts of money every week when you're brand new into the income game, by the time you hit 65, you ought to be a millionaire.
Oh, yeah, for sure.
All right, more to come. We'll be back in just a moment. Welcome back to the Jim Bohannon Show as we again look at more stocks plunging around the world. Now, of course, it is a worldwide market, it seems. Overnight, things have not been doing well in Japan or China again, and that followed what happened this past day. So we'll see how far this follow-the-leader mentality goes before that bargain hunting does set in, as we talk tonight with Clark Hodges, Vice President with the investment firm Hodges Capital Management, a Dallas-based investment advisory firm managing assets for institutions, endowments, family offices, and individuals. All right. Clearly, China is playing a major role in all of this. Even if things were looking hunky-dory in this country in every respect, China is the world's second largest economy, our third biggest trading partner, and if they sneeze, we're liable to go sniffle, aren't we?
Yeah, you've got that impact, global economy, and you definitely have, they're a big purchaser of our debt. And, of course, a lot of products come in from China, and we export a lot of things as well. So it definitely has an impact on these big multinational companies. I think where you see opportunity, though, is, take, for example, a movie chain here in the United States, just any movie chain that you might go and watch a movie at. They don't have any business in China, but yet you and I are still going to go to movies just as much as we have been based upon what we normally do in our week or our month. And the fact that China is going through something and their economic conditions are getting worse, you and I are still going to go to movies. So there's a lot of companies, and what I'm trying to say is there are a lot of companies in the United States that have nothing to do with China, but yet their stocks came down drastically today. That's the opportunity to find good quality names, domestic names that are all of a sudden a lot cheaper today.
Mm-hmm. The Chinese have done a lot of playing around, if you will. They've, in some cases, I guess they've been buying their own stocks and the like.
Yes.
People don't understand that the People's Liberation Army owns a fair chunk of the Chinese economy. It'd be like if KFC was owned by the 82nd Airborne Division. It's kind of a weird arrangement in this country. But I'm wondering the extent to which the Chinese, and of course they devalued their yuan, the currency, 3 times in 1 week. That tap dancing around, has that helped or hurt this crisis?
Oh, I think the jury's still out. You're right. Now, China companies, a lot of the companies, percentage-wise, are owned by the government. So when they go public, you might be buying 10% ownership is all the outstanding shares of some of these companies represent. So China owns a lot, and they're also manipulating their market in a good way, going in and reassuring by buying up companies during the trading day. That's kind of their version of quantitative easing. So they're stepping in and helping out, just like our Fed stepped in and helped out. And I think, whether it's good or bad, I'd love to see it happen overnight. I'd love for China to come in with some sort of new spending, development, road building, infrastructure type announcement today that's going to help boost that economy, help production, and help jobs, that you'd probably see a nice move in the market up, and then we'd have that infection over here as well.
Of course, all of that currency manipulation, like a lot of the ways that China treats intellectual property and a number of other agreements they've signed, quote unquote, apparently in disappearing ink, are deals that they simply ignore, and what's worse, the world simply looks the other way on. Is there anything that China could do economically that would cause the rest of the world to summon up the gumption to say, hold on there, you can't do that?
I don't know economically. Maybe from a humanitarian standpoint, they might do something that the whole world would stand up against. But
economically, they pretty much write their own rules just because they buy all our T-bonds. I have long argued that the best thing they could do for us would be to cut us off, just like if you're a junkie, the best thing the dealer can do for you is to cut off your supply of drugs. Wouldn't that be a shame if we were suddenly forced to live within our means? Right, and have our own self-reliance on our own stuff. Yeah, it's a good point. Yeah. In any event, when do you expect this to turn around? Tuesday? I mean, certainly I cannot conceive that we could make it to Friday without a turnaround.
No, I think you'll have some updates this week. I think you'll have some buying. I think you'll have markets get back to, today and Friday, you basically had everything down. So if you saw a stock up today on the close, let's say, if you saw a stock up on the close on Friday, my goodness, that's impressive. I think you'll get back to where you'll have a few stocks up, a few stocks down, a few stocks flat. It'll be kind of more normal trading. Looking out a few weeks, I think we're still in a trading range where we are now, up 5-6%, down 5-6%. I don't expect us to do a big V and go right back up to 18,000 in the Dow in the next few weeks. But I do expect us to go back to a new high in the Dow in the coming months, because that's what the market does.
And finally, briefly, in times past, whenever you had volatile times economically and otherwise, which we certainly have, gold was a haven. Gold hasn't done that well of late. Silver's not been doing badly, but why haven't we not flocked to gold?
Gold usually in the history of the markets is a good investment when there's a lot of fear in the street. It's a kind of a security blanket where there's a big fears of war or big fears of the commodities like oil and gas and just everything going to heck in a handbasket. And that's usually when gold has done well.
Well, we've had the fears, certainly, but we have not had clearly the other factors there. Transportation, of course, maybe will drive a lot more now that oil is so far down. Anyway, thanks to our guest, Clark Hodges of HodgesCapital.com.